changing markets. From last year's bottom interest rate of 2 to 3% to now suddenly the interest rates jumping between 6 and 7%. There is a dramatic change in the interest rate. So what should have happened to this market? The market should have adjusted to the increased interest rate by reacting by adjusting the home prices. What do you think is going on? Yesterday, this weekend, I was showing properties in multiple areas. And guess what? Every open house was filled with home buyers. And whenever I write an offer, I'm hearing anywhere between 12 to 20 offers. There was a weird one last week where one of our agents said they competed and wrote an offer on a property which had 105 offers. I don't know exactly which property it is, and this was one of our agents sharing what was going on in the market. So, what do you think must be causing this kind of activity? And the home values, yes, they are down, but not to the extent that the interest rate has jumped 3 times. The home values did not come down 60%. The home values have only come down between 15 and 20%. If it was 3 times interest rate jump, the home value should have adjusted by about 50 to 60%, and nowhere is that in sight. So what exactly is going on? So realize this, that at the same time that the interest rate has gone up, even the stock market returns, the stock market has also started becoming shaky. With that happening, what has happened is that people are taking money out from the stock market and they are putting this money into a home. So I have several examples of clients that I'm working with. And last year, say, Facebook stock was 385. Nvidia was almost close to 400 here in the Bay Area. Last year, there were other companies that had their stocks on fire, like huge numbers. And all those things came down this year. Like 2021 was like the peak of the stock market. So everybody was racing their money into the stock market. And when it was at the peak, they took some profit and they pushed that money into real estate. What I think is real estate is also one way of doing asset allocation in the homeowner's portfolio. So what they do is, if they see too much profit in their stock market investments, they take some chips off, they put them on housing. That is, they put them for their own enjoyment. If they see the stock market running down, they'll pull some money. Again, that goes into real estate investments sometimes. So, as weird as it may sound, I'm thinking that real estate home value drop is not consistent with the kind of interest rate jump that you are seeing. It will be interesting to watch whether real estate is going to get hit further or whether people are going to take the chips off the table from the stock market and the financial markets and go push it in their alternate investments like real estate, which gives them the benefit of enjoying their own home and appreciation, or something like gold, or some other commodities. Thing to think of. Thanks for watching. Bye. Subscribe, like, and share my video if you like these concepts. Bye.